Okay, good morning, everybody. Governor Anwar, distinguished guest, ladies and gentlemen. It gives me great pleasure to be back here in Pakistan. I was warmly welcomed. You said CWRD. I guess nobody knows what CWRD means. This is the Central West Regional Department of the Asia Development Bank. I have been many times in Pakistan before, particularly in the late 90s and early 2000s, and I did a lot of work on the financial sector program. And it is great to see that there is a good progress being done. And I'm very happy to share a few thoughts on financial literacy with you. After this good speech by Governor Anwar, I guess I have very little to add because you really said it all. But a few remarks, a few points I would like to share with you. One is I would like to talk briefly on ADB's role and support for financial literacy in Pakistan. Also on the role and the opportunities that this offers and the challenges that are lying ahead for us. A few years ago, in 2007, the Asian Development Bank financed the establishment of the Improving Access to Financial Services Fund with an initial capital of about $20 million equivalent. The fund was established as an endowment fund whereby the income generated is used to support two activities. One is training and capacity building for financial service providers as well as government and regulatory authorities. And second, it is to support literacy programs that are conducted for clients and potential clients of formal financial service providers. The fund was established for 24 years with the State Bank of Pakistan at the center, and it aims to provide a long-term source of funds for these activities. It has taken us some time to get it off the ground and to put in place the infrastructure, but I'm indeed very, very pleased to be here today and witness the launch of the operational programs that have been devised thereunder. Now, ADB believes, and I guess you all know that improving access to financial services is an essential element to foster sustainable growth across the economic spectrum as a whole, but in particular to bring more prosperity to low-income households and to the most disadvantaged in particular. Increased access to financial services on a sustainable basis enables the poor to engage in income-generating activities, to build assets, and thereby reducing poverty and vulnerabilities. Financial Access Survey shows that Pakistan's financial sector has yet to realize its potential and in providing access of financial services to the poor and low-income households. There are many challenges that remain, but there are also some bright spots. And the sector experienced progress in some areas over the past few years. For example, the number of access points, such as branches and automated teller machines, has expanded. This has enabled people to use more formal financial services and in particular deposit services. The number of depositors in commercial banks has increased by more than 40%, from 18.6 million in 2006 to more than 26 million in 2010. And this is noteworthy, and also much, of course, remains to be done. I think what is important to note here is that a trend has been established, and a trend that is encouraging, and a trend that needs to be sustained further. However, the financial intermediation levels are yet to recover from the balance of payment crisis in 2008. And the total amount of deposits in commercial banks at the end of 2010 was actually lower than it was in 2006. It was about 30% in 2010, but it was about 36% in 2006 and is now down to about 30%. And also the outstanding loans from the commercial banks are now only 21% of GDP, while they used to be about 29% of GDP in 2006. As I mentioned, the microfinance sector is a very important segment, and it's good to see that this is growing in Pakistan. From about 2 million depositors, borrowers in 2006 to about, and microfinance savers of about 3 million now, we've seen some good progress. But if we look at other countries, it still shows us that we are lagging behind. If we look in countries like India and Bangladesh in the neighborhood, there is a bit of catching up to do. And when we talk about growth in the financial sector, it is also important to ensure that this takes place on a sound basis. Extremely rapid growth or lending typically is associated with crisis at some point in time. We have seen that in many, many instances. And of course, if you just look across the border to India, I guess you're all familiar with what has happened in Andhra Pradesh and what rapid expansion can bring about. And this highlights that the poor are more vulnerable to the consequences of lack of financial information, money management, and other mistakes in financial exploitation. Overall, the benefits of increased access to financial services should outweigh their costs, and they should be equally distributed between providers and consumers. But this also requires that borrowers, too, and not just the lenders, are better equipped to deal with the risks. We know quite well the damage that can be done by reckless lending and misrepresentation of information, and the risks to borrowers made by providers of financial services in a drive to gain market share in a competitive environment. This is a challenge for regulators all over the world, and this is also a challenge for Pakistan. And this is where the importance of financial literacy becomes all too obvious. ADB recognizes the importance of financial literacy for individual well-being and for improving access to finance and financial sector development. Now, what does financial literacy do? Financial literacy does provide knowledge and basic tools to individuals and families that can help them make better financial decisions. Governor Yassin already talked about the importance of this, and it helps to make people who are faced with financing challenging situations in life, such as buying a house or becoming parents or starting a business, that they can make better decisions in these situations. We also know that financially educated individuals are more likely to save, and they save more than their less literate counterparts, which in turn fosters asset building. And empirical studies have shown that households with higher financial literacy are those that borrow at relatively lower interest rates. And they tend to plan for retirement and acquire more assets. They improve savings, and they act as a cushion against temporary crisis. So on the other hand, the lack of financial literacy may serve as a barrier to demand for financial services by inhibiting individuals that are not comfortable or not used to interact with financial service providers or to use financial services. It may also prevent financial consumers from reaping the expected benefits across access to finance in cases where consumer fails to understand the financial costs and benefits of a financial product, or in cases of poor debt management capacity. The new financial literacy program, which is to be implemented in Pakistan, is the first initiative to be financed by the endowment fund. We welcome this new program, and we would like to see many more of such initiatives coming forward. The fund was designed to provide grants to financial service providers that propose credible literacy initiatives, and ADB would welcome if more good proposals were to be financed by the fund. Looking at both the opportunities and the challenges that this provides, a few lessons can be learned. First, the program should target motivated people and those who may suffer from poor financial decisions. Second, financial education is more effective when people are facing financially demanding events. They must be able to apply their skills in real-life situations. People learn better when they actually use what they are learning, when they use a bank, take out or repay a loan, or maintain a savings plan. Third, as for many initiatives that aim to address complex issues with a variety of stakeholders, there is no one-size-fits-all approach. The training programs need to be flexible. They need to respond to the learners' real needs, and they need to be adapted to the local circumstances. And fourth, to be more effective, the public funded programs should be provided on a fair and unbiased manner that prevent conflict of interest. I guess this is something which is pretty obvious, but all too often this is overlooked. And finally, the quality of the education of the educators matters. Educators are more effective when they're able to advise and motivate learners to engage and to be responsible financial individuals and not just convey information in a very dry manner. The approach that is adopted in Pakistan seems to be sound and include most, if not all, these lessons learned from the international expertise. The program will start on a pilot basis, as was already mentioned, in some areas of the country, and then it will be expanded in subsequent phases after a proper evaluation has been conducted. We at ADB suggest that a third-party evaluation will. Financial literacy should not be seen as a panacea for remedying information asymmetries between consumers and providers, and thus for the challenges faced in developing financial intermediation. Consumers' financial literacy may be insufficient to assess product appropriateness, in particular when these products are fairly complex to understand. That means financial literacy cannot be a substitute for financial and proper regulation and consumer protection. But it will complement it. And it will make sure that we're going to have responsible consumers to start with. It is a necessary element for financial sector soundness, but it is far from being sufficient. Now, I am pleased that the authorities in Pakistan are working to address these challenges in improving access to financial services for all, and this is an initiative that we most welcome. ADB, for its part, will continue to have active participation as an observer of the Improving Access to Financial Services Fund and work with the authorities, in particular with the State Bank of Pakistan and other stakeholders, to support financial sector development in Pakistan. Again, let me thank you for the opportunity to be here with you and share some of these thoughts. And I wish you all the best for this important endeavor. Thank you very much.